Welcome back to the watch list. We want to discuss Adobe. What happened, right? You had a double beat, you have a buyback, but there are some details within this report that caused a sell-off, double-digit sell-off. Maybe there's opportunity in that name or the group. Andrew Graham is with us, CEO of Jackson Square Capital. Keith Kirkpatrick is with us, research lead at Futurum Group. Thank you both for being with us. Andrew Graham, was the buyback too much? What stood out to you? I know there are some details that set people off today.
No, the buyback wasn't too much. It was the net new annual recurring revenue growth, which was the lowest in 6 quarters. And that's the reason why the stock's off. So there's been a shift in growth. So the growth engine is shifting in Adobe to Document Cloud, which is about 16% of revenue, from Creative Cloud, which is about 60% of revenue. And that accounts for this slowdown in net new ARR growth. I think there's also this AI debate that we can get into, where customers may be pausing incremental spending to assess the new Gen AI products and like Sora and Runway and so forth, which have had some successful launches in terms of the videos, the text-to-video products.
Yeah, and I was looking at all of that with the new text-to-video products, new mobile editing, and there were questions whether or not AI overall would hurt or help Adobe. I'm curious to hear your interpretation, Keith. What did you find from the report? What stood out to you?
Well, I think, there's certainly a slowdown in recurring revenue, and that's always a cause for concern. I think one other thing that I've been focusing on in particular is looking at some of the questions around generative AI and its accuracy, its actual usefulness right now in terms of delivering business results. We certainly have seen some hiccups here and there with other companies, whether we're talking Google or Microsoft, and even recently with Adobe, with generative AI outputs not matching historically accurate images. Now, I will say, though, that if we think about this, this is not something that is that can be programmed easily. The way that you really address this is by doing more training with the model, making sure that your guardrails are appropriately applied, and then, of course, doing testing, and more testing. This is not something that's going to happen overnight. If you think about generative AI, we weren't really even talking about it just 12 months ago.
And the idea here, granted there's a lot of competition, but I think the background on Adobe, when I was reading a lot of the reports, Andrew, was that there were some strong growth trends within the company, right? It's not all bad news.
Yeah, absolutely. And Adobe, look, let's start out by saying that this is a serial beat and raise company. They do it every quarter. And they're so consistent, they did it again this quarter, and now they're going to do it again next quarter, in my opinion. And the AI debate, I think, getting back to that story or that conversation, is that the value proposition, this is one school of thought, the value proposition at Adobe is that it's an end-to-end platform with editing, processing, storing, and publishing. And more content, no matter how it comes, increases the total addressable market for Adobe, drives demand for their products, and eventually gets you to the finish line. In between here and there, there's going to be some time, because what we're talking about, the snafu, at any rate, with their product was Firefly, which was their answer to text-to imaging that OpenAI had released in the first half of last year. The stock traded lower. And then they came out in fairly quick order with Firefly, which does have some glitches like Google's Gemini. But I think they'll get those worked through. In the meantime, this debate's active. There's an uncertainty discount on the stock. And I think it's probably going to underperform until they can address that and get it over the finish line.
Okay, so you have at least some near-term concerns, when you say underperform. At the same time, we've had several analysts come out today with targets that are over $600. I mean, this was one that used to be $699 if you pull up a 3-year chart. For example, I see TD Cowen has an outperform 640 target. RBC has a 630 target. Keith, is this a name that today, when you see a pullback of 14%, do you say, look, I like it for the long term, or are you more concerned about the near term as well? Because as we were just saying, there is some strength to give it some credit for as well.
Oh, absolutely. And I think one of the other things to keep in mind when we're talking about Adobe is, their be-all, end-all is not generative AI. They essentially are creating platforms where generative AI is a tool to help creators create new things, and using that technology to do it faster, to get to better business results more quickly. And I think that's something that really shouldn't be overlooked with this platform, because really, you wouldn't take just a stock generative AI output and then use it in some sort of a commercial way. That's just not how businesses operate. So I think that there is, significant opportunity over time for Adobe.
Mm-hmm.
Yeah, understood. I'll give you the final thought. I mean, when we think about the space, any other names that stand out to you right now, Andrew?
In creative content, no. But in software broadly, I think there's stocks that take priority. And in terms of sort of an AI angle, where obviously Microsoft comes to mind, Salesforce, and then for us, Datadog and Snowflake. I think especially as you get further down into the inferencing phase, those software names stand out for us, and those are the ones that we want to own.
Yeah, the names to watch there. Great to see you both. Thank you so very much, and a good look there at Adobe, which is at 492 right now, down 13%. Andrew Graham, Keith Kirkpatrick, thank you.